Good afternoon and welcome to BizTech's ASEAN Midday Market Watch. Our guest today is Gabriel Yap. He's the Executive Chairman of GCP Global. Hi, Gabriel. Good to have you on the show.
My pleasure, Brian.
Now, Gabriel, let's take a quick look at how markets are performing, and then we'll come back and get your insights.
Wonderful.
Now, the Nikkei is trading at 28,466.91. It's down 0.57%. The Shanghai Composite is up 0.01% at 3,566.67. The Hang Seng is up 0.26% at 29,718.86. The ASX 200 is up 0.57% at 6,780.90. And the Kospi is down 0.2% at 3,088.99. Also, there's just a news flash that Alibaba's founder, Jack Ma, has reappeared for the first time since a crackdown on his tech empire. So we'll look forward to developing news later today on that story. Now over to Bursa Malaysia. Bursa Malaysia is trading at 1,614.86. It's up 0.81%. And finally, to round it all off, we've got the SGX is at 2,988.09. It's down 0.26%. Now, Gabriel, what's your take on markets throughout the region?
Well, not surprisingly that we have started the year strong, and this year the momentum has continued. So essentially, across the broad sectors, be it value, cyclicals, you are actually seeing a perk up. Even if you actually look at the China internet stocks traded in Hong Kong, secondary listings in Hong Kong, they have done well. Commensurately, the ones that are traded on the primary market, that's basically the Nasdaq, has also done well.
Now, speaking of China stocks, we've got Geely and Tencent who've just announced this morning that they will work together on areas in the fields of, and I'll just read this out, digitization, intelligent cockpits, autonomous drive, and low carbon development. Now, what are your thoughts about Tencent and Geely stocks and moving forward? And do you own any of these stocks?
Oh yes, Brian. In past programs, particularly the one that I've mentioned during the Christmas Eve interview with you, we have specifically mentioned to you that we are big holders of Tencent. In fact, we have been holders of Tencent, for a long, long time. But we did indicated in your Christmas Eve program that it was the best time to buy. And then henceforth, Tencent has actually shot up from 512 to $670 in today's market. So essentially, it's up more than $150 in less than a month. You see, so you never had this great winner for a long time. But back to your question, yes, we own Tencent. Yes, we continue and would love to own it. This news today is really good because it sort of cements, what we have been very bullish about last year. You notice that in our various interviews with your kind self last year, we have enumerated and emphasized electric car as electric vehicle as the sector to be in. So we have also mentioned the likes of XPeng, XPEV, that is the ticker code, Li, LI, as well as actually NIO, for which Tencent actually has a stake. And today you notice that essentially Geely is also jumping on the bandwagon. In fact, other than Geely, the other big auto players, that is actually SAIC in China, is also getting on the EV springboard. So it seems that the momentum that's carrying on EV or electric vehicle segment will continue for this particular year. So I would say that essentially I will still stay with the winners as what we have done so far.
So I noticed that you avoided mentioning whether you've invested in Geely. Is that something, because it is a traditional auto player that is very, very successful. They own stakes in Daimler, they own stakes in Volvo, and they're obviously positioning themselves for the future. Would you invest in those sort of traditional automotive stocks that are just kind of moving with the times?
Essentially, Brian, like what we mentioned in our last program with yourself, you notice that essentially you asked about at the time, is it a good time to enter into the likes of China Telecom? Well, we actually lay out the basis for you that it's actually trading on a cheap valuation, be it on PE, price to book, so on and so forth. It's the same case for the
Okay.
likes of
Yep.
ASIS, AIC, as well as actually Geely. Our reluctance is more because we prefer the electric vehicle players, the new ones, they are
The
actually
pure
going
plays.
to, yeah, they are likely to cannibalize, the internal combustion kind of players like Geely and SAIC. So with, I would say that, capital is always limited. So, it's always wise to be looking at those which can deliver you both alpha returns and beta returns. And we reckon that essentially the electrical vehicle players would be in a better state than the traditional players.
Now, Gabriel, overall markets throughout the region, throughout the world, in fact, continue to rise. Now, that's fueling speculation, especially among many investors, that we are in an absolute overinflated bubble right now that is ready to burst at any time, particularly in equities. What is your view on this?
Well, for sure, Brian, essentially, it is difficult to fathom, that a bubble can happen or materialize when interest rates are at 0%. In fact, the ability of the Fed to actually lower interest rates to 0% actually is the prime mover for a bubble to form. But as you know, the last time when the Fed actually decreased interest rate down to 0%, that was during the heights of the global financial crisis from 2007 to 2009. What actually happened then was that the equity markets actually move up from then, to the heights of 2017. So that was a very good 8-year period. But this is not to say that equity markets just move up in one direction, because in October 2011, we had the PIX crisis. That is actually the debt crisis emanating out from Europe. That's PIX, that stands
Yep.
for your Portugal, Italy, Greece, and Spain. Did those problems go away? No. Okay. So in 2013, the then Federal Reserve Chairman Ben Bernanke warned about taper tantrum. And guess what? Equity markets did pull back a bit, but guess what? He was wrong again. And then equity markets started to rise. And it wasn't even until August 2015, then we had the renminbi devaluation that actually caused equity markets to then take a breather. But if you take a step back, Brian, from 2019, the app in March 2009, right up to 2017, equity markets throughout the world, particularly so in Asia, actually gained between 250 to 300%. So if you ask me this kind of scenario, is it likely to be played out? Well, at interest rate at 0%, it's hard not to fathom that this may happen again. The thing, of course, is that it's not just going to be a straight line up or straight line down. So being a savvy and a smart investor, I think one must always look for opportunities. And of course, when there are pockets of, I would say, over bullishness, then it's time to actually switch your money out, into from those overvalued stocks or overplayed stocks, to those that are looking of good value at this juncture. So the test
Okay.
bait for equity is looking good, in the next few years, but it's not to say that you just go in with your eyes blind.
Gabriel, thank you very much for that sagely advice. We've been speaking to Gabriel Yap, Executive Chairman of CGP Global, on the ASEAN Midday Market Watch. I'm Brian Fernandez. Check out www.biztech.asia for business and technology conversations.